Ladies and gentlemen, thank you for standing by, and welcome to the Lucid Group First Quarter 2024 Earnings Conference Call. I would now like to hand the conference over to your speaker for today, Maynard Senior Director of Investor Relations. Please go ahead.
Thank you, and welcome to Lucid Group's First Quarter 2024 Earnings Call. Joining me today are Peter Rawlinson, our CEO and CTO, and Gagan Dhingra, our Interim CFO and Principal Accounting Officer. Before handing the call over to Peter, let me remind you that some of the statements on this call include forward-looking statements under federal securities laws. These include, without limitation, statements regarding the future financial performance of the company, production and delivery volumes, financial and operating outlook and guidance, macroeconomic and industry trends, company initiatives, and other future events. These statements are based on predictions and expectations as of today, and actual events or results may differ due to a number of risks and uncertainties.
Hello, everyone, and welcome to Kilowatt, a podcast about electric vehicles, renewable energy, autonomous driving, and much, much more. My name is Bodhi, and I am your host. And on today's episode, as you probably already know, we are going to be talking about Lucid's Q1 2024 earnings call. There are a lot of repeated themes in this earnings call, and I'm only going to play about 6, maybe 7 clips in total from this, and they're all edited down to make sense for this show, as I always say. So here's some of the themes that they're going to talk about. Scaling. In order for Lucid to make money, they need to achieve those economies of scale. They are going to talk a lot about the efficiencies of their car, which means reducing the battery size, which means getting more range, which means reducing costs. They're going to touch on their mid-sized platform, which isn't out yet, won't be out for another 2 years, not even announced, other than we know that it's a mid-sized, more affordable Model Y competitor platform. And then they're going to talk about brand awareness. So let's go ahead and jump into Peter Rawlinson's opening remarks. And again, all of this is edited so that it makes the most amount of sense for this show. If you want the full and complete earnings call, I'll put a link in the show notes and you can listen to it at your leisure. All right, let's go ahead and jump into Peter's opening remarks.
Now, I believe there are 2 key factors that really set Lucid apart: our superior in-house technology and our partnership with the PIF, who have been steadfast investors and partners. In Q1, we raised $1 billion in capital through a private placement of convertible preferred stock to an affiliate of the PIF. We're a strategic partner in the country's plan to achieve its Saudi Vision 2030 goals. I'm very grateful for the PIF's continued confidence and their steadfast support.
So another repeating theme they talked about a lot that I should have mentioned is the Saudi Public Investment Fund. The PIF fund is how Peter will say it throughout the clips that you're going to hear. Whenever the question came up about financing, whether or not they'd have enough money to finance the production of the Lucid Gravity or the mid-size platform or just whatever. It doesn't really matter what it is. If it came up with, are you going to have enough money to do this? Peter Rawlinson said, well, we have this really neat relationship with the Saudi Public Investment Fund, and they're really good partners. So essentially, I don't know if this is the best term, but essentially the PIF is Lucid's sugar daddy. And Lucid is a sugar baby, which is how I'll be referring to them here on out. Anyway, and listen, I'm not one to talk. The PIF has advertised on this show. I don't have any control as to what ads go on my on this show per se, but they've definitely advertised their renewable energy efforts on this show. So I've heard it with my own ears. Anyway, in our next clip, Peter's going to give us the production and delivery numbers for Q1 2024.
Turning to production and deliveries, in Q1, we produced 1,728 Lucid Airs, and we delivered 1,967, both slightly above our expectations. In fact, it was our best quarter to date for deliveries, up 39.9% year over year. Our lower production than deliveries is an active decision to be cost-conscious and is not a reflection of production bottlenecks. For 2024, we expect to produce approximately 9,000 vehicles, which is consistent with our guidance last quarter.
So production and delivery numbers actually don't look that bad for Lucid. They need to do better, but all in all, it's looking like they're going to do better this year than they did in 2023. And, if they can still stay afloat financially until they make money, that's not a bad thing. Next up, Peter's going to give us an update as to where Lucid stands today.
Let me now provide you with an update on where I believe Lucid stands today. We've made solid progress on both brand awareness and pricing, with our general brand awareness raising in the first quarter despite reducing media spend from the fourth quarter. Now, Lucid Air is increasingly recognized as a superior vehicle in nearly every aspect that customers value. For the third consecutive year, Lucid Air was named the best luxury electric car by US and World Report on its 2024 Best Hybrid and Electric Car Awards. Lucid Air is the only EV to win this category award 3 years in a row, another achievement that sets us apart.
I don't have much to add to that other than in previous earnings calls, if you've listened to any of those, he talks a lot about brand awareness. Like basically people don't know that Lucid exists. So since people don't know that Lucid exists, sales are down and they need brand awareness so that they can bring sales up. And that might be partially true. However, I would argue that if you're looking in the market for a, let's just say $70,000 to $250,000 EV, you could probably do a Google search and figure out which EV you want to buy, and Lucid's going to be one of those options. Whether or not it's a trusted option, that's a different story. I think Lucid's actually done a pretty good job in terms of building a good car that people do seem to be happy with. I haven't heard a lot of people complaining about their Lucid Air. So next up, Peter's going to talk about savvy consumers and why they're choosing the Lucid Air.
Now, consumers are savvy and they recognize the deficiency of other EVs in the market, particularly the limited range of most EVs. To ease fears of range anxiety, other automakers must produce and install bigger batteries, which results in higher cost to charge the vehicle and longer relative charge times versus Lucid Air. Remember, Lucid Air is the most efficient vehicle in its class as measured in miles per kilowatt hour, while leading the industry for range and charging speed and having a lower total cost to charge. I've seen commentary about our losses per vehicle, but such speculations reflect a lack of knowledge about our costs and our scale-up intentions. Inside the ostensibly high cost of goods line item is the cost of the factories and equipment needed to make the vehicles and scale our business. If we envisaged the company would only make a small number of vehicles, we would have purchased less equipment and built a smaller factory. But we have a more ambitious goal to provide affordable, long-range EVs for mainstream mass-market consumers. And as we scale, the leverage in our model should become obvious. And we're embarking on a transformational phase, the expansion of our vehicle lineup. Lucid Air Pure is already here with a starting price from $69,900. And the Gravity SUV program is scheduled for start of production late this year.
So if you're just hearing him mention that Lucid Air is the most efficient car in its class, with this clip, because I realize, I'm cutting this down from an hour and 4 or 6 minute earnings call down to hopefully less than 30-minute podcast, just know that he's probably said this already 7 times. it's all throughout this presentation. The Lucid Air starts at $70,000 and has a range of 419 miles, which is pretty good. The Mercedes EQS sedan is $104,000 and has a range of 350 miles. The BMW i5 starts at $67,000 and has a range of 270 miles, and the Tesla Model S starts at $73,000 and has a range of 402 miles. So based on that metric, Lucid probably has those other car companies beat. But the question is do they have them beat in all the other categories? Like right now, Tesla's rocking it with the full self-driving, which I've got the trial. I don't know if I've said this publicly yet, but I've got the trial. I got it a week ago, or almost a week ago, and I'm very impressed with it. I still don't trust that 100%. I would say it's probably 90% of the way there in most scenarios, probably 80% for all scenarios. But yeah, it's pretty good. I've been driving everywhere on full self-driving, and I'm really enjoying it. However, is it worth $99 a month? Nope. I still have to pay attention even more, I find, when I'm using full self-driving than if I'm just driving the car myself, which I'm still paying attention, of course. But anyway, the whole point is does Lucid beat these other car companies in all those other categories that people may want? Like the Mercedes EQS probably has just a ton of luxury built into that car. The BMW i5 at $67,000 and 270 miles of range, people are buying that car because they want a BMW i5. I don't think they're buying it because they care too much about the range. They just want a BMW, brand loyalty. And maybe the BMW i5 does some other things that the Lucid doesn't. I have no idea. But just in general, I haven't tested these cars out, so I can't say with any authority. But I'm not convinced that they're beating these other manufacturers in every category. They are beating them on range, though. Let's see. He talks a little bit about the build-out costs. 9,000 EVs is not enough to hit economies of scale. We talked about this. I don't know what the number is, but it's a lot higher than 9,000 for sure. But Lucid is expanding their lineup with their mid-sized EV, which production should start, according to them, in late 2026. Maybe priced around $48,000. We'll see what actually ends up happening. I don't know if I put this in or not, but the technology deals that Lucid has right now, like Aston Martin, they have a partnership with them. They have other prospective partnerships in the works, and they're also providing the front drive unit for a electric racing series. They didn't specifically say which one, and they're opening to licensing their software to other companies as well. So that makes sense. Let's move on to retail investor questions. And I think this first question is fair. What is the pathway to profitability?
Our first question is from Anaf. Can you elaborate on Lucid's pathway to profitability? What are the key milestones and challenges the company anticipates facing in reducing production costs and achieving positive gross margins?
Thank you, Anaf. It's all about scale. The more we can scale, the more cars we make, the more volume we can spread the fixed costs. That's the cost of our investment, our incredible factory and facility, our long-term investments across the sale of each car. So how do we do that? We need to continue growth of Lucid Air sales right now. And right now we're trending up 40% from Q1 this year relative to last year. Now, in a similar period, we see the sales of Tesla Model S down very, very considerably. We're outselling key competitors like Porsche Taycan. It's about scale. And the next thing on that scale path is to get Gravity into production. That will have a multiplier effect upon the market size. And Gravity is scheduled for start of production late this year. And then beyond that, we need to get a mid-size vehicle, a volume vehicle, priced at around, we believe, about $48,000. Get that into production, and it is on schedule for production for late 26. And I've got to tell you just how much our current finances are truly dominated by the major investments that Lucid's made for its future. Things like the expansion of our Arizona first factory. We've got nearly 4 million square feet in there. General assembly is ready. We're putting the robots in now for building the body structure for the Gravity. We've invested in a huge stamping line. We're integrating logistics. We're bringing a powertrain facility right under that one roof. And that's exactly where we're going to make the units that we supply to Aston Martin, all under one roof. And I think there's some photographs in the presentation, Maynard, and videos on our social media pages. And then the other thing is that, the real big advantage that Lucid's got over everyone else is efficiency. And I don't say that as an engineer, I say that as a businessman. That efficiency means we can make cars with smaller batteries, with less batteries than anyone else. That means because the battery is the most costly part of an EV, we'll be able to make cars more cost effectively and therefore with more profit margin than anyone else.
So the answer is scale, right? You got to scale up productions so that you can hit those economies of scale, you can reduce prices and actually start making money. But right now, they're not making money on the lines that they have. I would imagine that they're going to build, and I don't know if this is the case or not, but I imagine they would build the Lucid Gravity on the same lines that they're building the Lucid Air on. And the reason why I would imagine that is it makes the most amount of sense, like putting a whole new production line in for another vehicle that might sell in the low thousands doesn't make a lot of sense financially. However, they might just do what they're going to do. But they need to scale. They're only building 9,000 cars per year. They have a factory in Arizona that's billions of dollars. 9,000 cars per year are rolling out of that factory. They're also building a factory in Saudi Arabia. Like, I don't know how many of these vehicles they're shipping off to Europe and the Middle East and Asia and stuff like that. But it seems like it'd be a whole lot cheaper just to ship these vehicles to those locations than it would be to build a factory in that region. At this point, to build a factory in that region to produce these cars, so your shipping costs go down. Does that make sense? I mean, I'm truly guessing this, and I don't have any inside knowledge, but I'm guessing the factory in Saudi Arabia is like, we want a factory and we'll pay for it, and Lucid's like, all right. I mean, you're continuing to give us money. Go ahead, pay for it. I can't imagine that's a good business decision for a company that is selling 9,000 cars a year. He talked about lots of investments and all that stuff. We're not going to go into that. He talks again about efficiencies, production efficiencies, the car efficiencies. He mentioned a little bit about licensing the batteries and motors to other manufacturers. Again, I didn't put that in. But yeah, he also mentioned, and I didn't put this in the clip either, licensing the technologies that will go into the mid-sized vehicle to other companies. And, that makes sense. I do think Lucid, and I think Lucid has a great product. I think Peter Rawlinson is a really smart engineer. Now, I don't have proof of this, but back in 2017, when I went and visited with Lucid people, there was this very nice elderly Englishman that really explained a ton of stuff to myself and my kid, Sierra, who was with me at the time. And he was great. And looking back on that, I think I was talking to Peter Rawlinson. I don't know if I was or wasn't. I'll have to go back and see if I can't find pictures of those moments. But I think I was talking to Peter Rawlinson about the front drive unit for the car. And whoever I was talking to was very smart. Peter Rawlinson is very smart. He's not a dumb man. And I think there are other, companies, legacy automakers, who want to build EVs and aren't succeeding at the moment. They would probably kill to enjoy some of these efficiencies that Lucid claims to have in their products. All right, let's move on to the analyst questions. We only have 2 of these, so let's start with, can Lucid get funding to launch their mid-size car? Now, I'm going to play this clip, but I'm guessing, based on everything that I've told you to this point, you can guess what the answer is going to be.
Our next question comes from the line of John Murphy with Bank of America. Your line is open.
By the way, before we get to the clip, I would really like to know who's the person sighing in the background.
Good evening, everybody. Peter, I don't necessarily mean to conflate, the company necessarily with Tesla for many reasons. But I mean, as we look at the S and X, the company was struggling, and it wasn't until the 3 and the Y launch that there was kind of an escape velocity on self-funding. And it seems like, we're looking at sort of somewhat of a parallel here. And I don't mean to make the explicit direct comparison, but it does seem like the space or the smaller vehicle launching in late 26 will be sort of where you potentially reach that escape velocity, similar to when they hit the 3 and the Y. So I was wondering if you would maybe kind of concur with that to some degree, right? I hope you don't take offense to that, but to some degree. And then also, as we think about that, we're seeing sort of these dribs and drabs, and I wouldn't say, $1 billion is a drib and a drab. It's a lot of money. But, sort of this question from investors, will you be able to get the funding sort of guaranteed to get to the launch of that escape velocity, or maybe it's the space, in 2026? So, I mean, one, do you kind of agree with sort of that logic that's when you reach escape velocity, and will you have the funding to get there?
Thank you, John. An interesting parallel and a very thoughtful question from you, as always. I mean, look, the vision is to get to very significant volume, and clearly that comes in 2 steps. Well, there's 3 steps. First of all, scale Air more with brand awareness. Step 2, go for about 6 times the TAM with Gravity. And I really believe there's a very big, significant opportunity with Gravity that Model X didn't capture, because Model X was a bit car-like, a bit CUV-like, whereas Gravity is a proper SUV, and it's a 7-seat, 3-row. And we've got this unique secret weapon that we can go further with less battery and address the critical cost of making these products, and which you'll see unfold as we get to a degree of scale which Gravity will enable. But it's true to say that we won't bear full fruition of all that until we get the mid-size platform into production, and it's scheduled for start of production late 26. Now, regarding our partnership, what really sets us Lucid apart is the combination of 2 things: a unique world-class technology combined with our special relationship with the PIF. And that relationship with the PIF transcends a merely financial one, because they are invested in us as a cornerstone of transitioning the economy of Saudi Arabia to a sustainability model with their audacious Vision 2030. And we're in this together. They are equally incentivized for success. Right now, running in Saudi Arabia is the first car plant they've ever had operating, and it's a Lucid plant. Right now, we're laying the foundations, literally pouring the concrete for our complete business unit, our CBU factory, which is scheduled to sync with the arrival of the mid-size there in Saudi Arabia. They are incentivized for our success. We are mutually incentivized for success. Nothing less than success is acceptable here.
First of all, were any of you surprised with the answer? I'm not sure that I wasn't. I wasn't surprised at all. I did a little Google search while I was listening to that clip, and I said, what percentage of Lucid do the Saudis own? And I honestly thought it was going to be higher than 50%, but I didn't know how much higher. And I was right, it's higher than 50%, but they own, according to Reuters, as of March 25th, 2024, they own 60% of Lucid. So effectively, Saudi Arabia owns Lucid. There is a scenario where Saudi Arabia just buys the entire company and it's no longer traded on the stock exchange. And, they just do what they want with it. All right, let's get into our last question, which is about the mid-size model and taking pre-orders.
And then just following up on John's question about the mid-size, more mass market model, have you guys thought about providing some more just detail on it, maybe some teaser pictures a little earlier to try to drum up just some more interest from a broader consumer base, and even potentially opening the door to reservations to just generate some more liquidity. Thank you.
Well, and that's an interesting point. I actually think that the consumer has been ill-served by some players in this space by taking reservations way ahead of time in a very artificial manner. What we believe is a much greater degree of transparency and really getting closer to that product being an absolute reality. Remember that any such reservations and money taken is a false form of liquidity because it's something we would have to put in escrow anyway. It's not true liquidity. And we believe in absolute transparency and showing the product with a realistic specification. As we're doing, say, with Gravity, we've not taken reservations deliberately until we get closer to the start of production. This is a philosophy that we've adopted, and we will let you know that time in the future when we open a waiting list for Gravity. And we're not even close to, I don't think it's right to be opening up reservations on a product that is over 2 years out. I just don't think it. I think it all serves the consumer, and it's something that I think there's a transparency that's lacking from that.
I actually agree with this pretty much every word. I don't think there's any advantage to it. I think you actually create more ill will if you're late or if you don't deliver on what you promised or whatever. I think this path is fraught with peril. I don't think people should be taking it. So I agree with Peter on this one. All right, everybody, that is it for me this episode. I hope you all enjoyed it. I think this was actually a pretty interesting earnings call, despite the fact that they just repeated the same four talking points. But we learned a little bit about the mid-size vehicle, learned a little bit about what's going on at Lucid. So overall, I think this was interesting. Hopefully you did too. If you want to email me, it's Bodie, BODIE at 918digital.com. You can also find me on X at 918digital. I also have another podcast called Beyond the Post I do with my buddy Rob. I can't tell you who it was, but we had a big YouTuber or short form media content creator on an interview today, that interview won't be aired until July. But if you want to know who we interviewed and who we talked to, subscribe. There are links in the show notes to take you to where you need to go to subscribe to that podcast. I'm really enjoying it. The whole goal of that podcast is to help people become digital creators and to give them a realistic view into what it's like to do stuff like this. I even give some behind the scenes stuff that goes on with this show. So if you're interested in that kind of thing, check it out. All right. Friday's episode is going to be news, and then Tuesday, May 21st, is going to be Rivion's earnings call. So hopefully it is as good as this one was. Right. I'm just continuing to talk. I don't know how to close this out. I'm going to go make a phone call and see if I can be if I could be a sugar baby of the Saudi Public Investment Fund. Wish me luck.
Thank you. So this concludes Lucid's first quarter 2024 earnings conference call. Thank you all for joining us today, and you may now disconnect.